Good morning. I'm Peter Milios from the Finance News Network. Stocks ended the session higher on Thursday in what was a turbulent trading session as traders bet that the Federal Reserve may be nearing the end of its rate hiking cycle. In addition, the number of people filing for unemployment benefits for the week ending March 18th decreased by 1,000, beating estimates. This report is seen as a positive sign for the labour market, which continues to perform better than expected and poses a potential challenge for the Fed's planned tightening of monetary policy. Overall, the broader market index was up 0.3%, while the tech-heavy Nasdaq Composite climbed 1%. The Dow Jones Industrial Average rose 0.2%. The S&P 500 and Nasdaq gained as much as 1.8% and 2.5% respectively before easing from those levels. Technology stocks outperformed, boosting markets as investors reduced their Fed hike bets and Treasury yields declined, with the SPDR Technology Select sector gaining 1.3%. Microsoft, Nvidia and Apple all advanced. Tech was the hardest hit part of the market as the Federal Reserve raised rates 9 straight times in about a year. The turn lower in rates this month is causing investors to rotate back into tech shares. TikTok CEO faced a hostile congressional committee threatening to ban the app amid accusation of it being a tool of surveillance and a cancer. The CEO assured US legislators that the app would not be manipulated by any government, but tensions between the US and China have escalated, and TikTok has become a flashpoint. In crypto news, the US Securities and Exchange Commission issued a warning to investors that firms offering crypto asset securities may not be following US laws and may not provide necessary information for informed decision making. The SEC has been taking action against the crypto industry, which its chair has called a wild west of misconduct, and this has accelerated since the collapse of the cryptocurrency exchange, FTX, in November. Looking at the financial sector, regional stocks fell broadly, with the SPDR S&P Regional Banking ETF losing 2.7%. To be sure, the fund regained some losses after Treasury Secretary Janet Yellen said the administration is ready to take additional actions if warranted to stabilize the US banking system. To commodity news, Goldman Sachs has raised its 12-month price forecast for gold to $2,050 an ounce, citing it as the best hedge against financial risk and reiterating its bullish view on commodities, expecting a rise in prices with the supply constraints becoming evident later this year. Overall, overnight, almost all S&P 500 sectors closed lower. Communication services and technology were able to finish higher, each closing by more than 1.5%. The SPY futures are pointing to a 0.6% fall. Thank you for listening. Have a great weekend.